Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the reasoning behind the moves today so that we can better understand tomorrow. And today, we're going to dig into the Forex market a little bit. We're going to take a look at the Euro USD for probably a pretty obvious reason if you can't tell by the chart. This is obviously a very, and very is an understatement, bullish day. We started off this run higher at about 3 this morning. You know, around last night, they really didn't get a whole lot going, but when 3 o'clock hit, man, this thing just rocket shipped up to the highs. And this move higher is something that a lot of traders will trade incorrectly. It's very normal for that to happen. A lot of traders will look at this and think, there's no way it can keep going higher. It's got to be a top, and they try selling into it. Whenever you're looking at this type of situation, there's going to be 3 different types of situations that occur. The first one is that buyers will be buying any pullback they can get their hands on, regardless of how shallow the pullback, regardless of how deep the pullback. If it looks like a good pullback, they're going to buy it. That's just the type of day it is. The second thing that's going to happen is there are going to be buyers that are already in. There are buyers that have bought way back here, bought these first couple pullbacks, and they're adding to their position, increasing their stake in the move with the understanding that this is a very aggressive move and it's probably going to keep going higher. And then there's number 3, the one that a lot of traders fall victim to. There will always be counter trend traders, okay? There's going to be folks who are looking at this thinking there's no way it can go higher. This is probably the top. I need to be selling into this, and they're going to look to try to fade the highs. Let me give you a little piece of friendly advice. Don't do the number 3 one, okay? Just don't do it. Very frequently, you're going to find a lot of those sellers on a day like today getting stopped out over and over. What you would much rather do is go with the trend, but be a little bit more conservative on your entries. If you're going to be, maybe you're trading a smaller account. Maybe you want to find a way in that isn't so aggressive. Wait for a nice, good pullback, follow your plan, and get in on that pullback. We had this massive spike higher here, which is likely going to get a lot of buyers who've been buying in all morning. They're going to see this and think, man, thanks market, I'm out, see ya, right? Take their profit and then look to reload on the next pullback. So this is going to cause a little bit of a pullback. That doesn't mean sell, okay? Those two don't equal each other. When you see this kind of move, you have to look at the context of the situation. This is a ridiculously bullish trend. I don't want to be a seller in this. I want to be looking to be a buyer on the pullback. Let the buyers who got in down here, who bought all of this through here, let them take their profit, let them pull the market back. When you get a good reason to get in long, like a beautiful bounce after a gap fill, like a beautiful secondary bounce, pretty much any reason, then start diving into the market, but go with the trend. It's very important in this type of scenario. So we have a beautiful pullback. Buyers hold the moving average. They hold the bottom edge of that massive spike higher, and they start scaling in aggressively, causing a nice spike back to the upside. Now, this is the initial position that a lot of buyers are going to be jumping into because it's a beautiful place to be jumping into. It's a twin reversal underneath the moving average. It couldn't even pull back to test the bottom edge of the channel. There's so much bullish pressure here that you need to be a buyer. If you didn't take that one, you have another opportunity where the sellers get trapped. The sellers try coming in. They try selling underneath it. Again, there's going to be those counter trend sellers, and they're going to get slapped when they see this big bull candle. They are not going to hang on anymore. They're going to exit their position, and that's likely going to cause another push higher. And that's a good reason to become a buyer because the sellers are exiting their position and nobody's left to sell it anymore. Now, they actually did follow it up one more time, another very weak bear candle. It triggered sellers in and immediately slapped all of them out as well. So it's kind of a double trap. The sellers try coming in once, trapped out. Sellers try coming in again, thinking, they wanted a second attempt. Now we're going to go lower, and it traps them too. So essentially, you have a double trap, beautiful double buy right there for traders who are following with the trend for a move back up to the highs. We tap above the highs. Likely, you're going to have a lot of buyers taking profit here. This is the first big pullback that we've had, and there's also going to be counter trend sellers here once again. So what does that tell us? Well, we know there's counter trend sellers, and that means that there are going to be stops above the highs. We also know that this is a ludicrously strong bullish trend, and we need to be buying it on a good reason. We get a strong pullback to the moving average. The buyers attempt to come in, but a very weak bull candle. It does negate the bears, but it's not that great of a candle to be buying into. They try to push back down again and completely fail. If anything, sellers who maybe took this as a counter trend move lower got out at break even, and it turns back around into a beautiful bull candle back up towards the highs. And that's your reason to jump back in and fire the move back up, for several reasons actually, not just the candle itself. But we finally have a test of the channel. We're holding the moving average once again. Sellers either got trapped, are still stuck, or they got out at break even. And the entry here means that their stop run is going to be just above. So it's kind of a perfect storm for another rocket ship back up to the highs. This is one of the best types of trading days that you can get your hands on if you trade it correctly. And that's the big caveat, because a lot of people don't trade these correctly. They try to go counter trend. Don't do that. When you go counter trend on this kind of day, you're going to blow your account out. Just stick with the trend. Keep buying everything that you can get your hands on. And if you think it's going to reverse, that's probably when you should be buying more. So awesome day on the Euro USD. If you're a Forex trader, phenomenal day. With lots of pullback opportunities to get into the trend, and that's going to do it for this one. So hopefully you learned something. Hopefully you didn't make those counter trend mistakes. We've all been there if you did. If you did, learn from those mistakes, and the next time you see one of those types of days like this, you'll know exactly how to treat it. So that's going to do it for this one. If you have any questions, feel free to send me an email, jbrink@slingshotfutures.com, and we will see you next time.